Hello and welcome back to another episode of the Investor Financing Podcast. I'm excited today. We're going to talk entrepreneurship. We're going to talk about getting started in real estate at a young age, growing two multi-million-dollar businesses, is now having like 5, 6, 7 businesses. And what I like about our guest, he's got diversification. He's done, the C-class properties. He's done self-storage. He's raised money. He's done pretty much all of that. He knows a lot about crypto, which I'm trying to learn now. I think I'm behind the curve here, but it's interesting to have somebody that's got diverse background and has really been an entrepreneur his whole life. He's got a podcast called the Indestructible Wealth Podcast, and he has a coaching kind of framework around the indestructible wealth. And I think we all want to have an indestructible wealth, and that's my passion in life. As I get older, I'm realizing I made a lot of mistakes in my 20s, and now I'm 44, and I got to make the right decisions for the next 10 years because hopefully at 55, I am completely passive, meaning I have my financial independence numbers there, right? And so it's taking these steps every day, and I think that's where our conversation is going to go today. Please welcome Jack Gibson to the show. Hey, Jack, thanks for joining us.
Thanks for having me, Beau. Appreciate the invite. This is going to be fun.
So you, in your bio, I mean, your bio is pretty amazing, right? Like, you got started as an entrepreneur in your dorm room in college. Mm-hmm. Now you're coaching people. You love to inspire entrepreneurs. So, what planted the seed in college, and that got you into the real estate game?
Well, yeah, real estate didn't come until about 5 years ago. I started in direct sales while I was, in the college dorms at age 19. I grew up with the rich dad. It wouldn't be the rich dad, poor dad, because my real dad was not poor, but you had, I had my rich uncle who had no kids of his own. He had 3 different businesses. He was an entrepreneur. He was a great investor. So I got to see, his kind of model of success in life. And my father, he was a professional. He did arson investigation, for State Farm Insurance. If somebody burns their place down, he's got to figure out, did they do it or did they not, right? On purpose. And yet, seeing the difference between the two, I mean, my uncle, when he passed, I mean, he had amassed several million in wealth. And so I realized there's a lot of perks to being an entrepreneur, having growing businesses successfully, and then taking the excess cash flow from those businesses and, being smart with it and buying other diversified assets to further create additional streams of income. So yeah, that's where I kind of learned what to do. And when I was in the college dorm, I got an opportunity knock with another college student was handing out flyers about a direct sales opportunity in nutrition. So I jumped on it, and I was really not going well, Beau. I mean, I was about 9 months in. I was completely broke, mismanaged my money. And I was like, oh man, what am I going to do? I got to get the word out. So I sold off my CD collection. So I'm 44, you're 44. We know what CDs are. Your listeners, some of the younger ones might not. But I sold my CD collection. I put an ad in the paper. And then that got me a customer who lost like 100 pounds. And then he told 20 people about it. And then my business just started cranking. And soon, by my junior year, it was $1 million business in sales. And then, I went into it full time. So that was kind of how I got started.
Got it. So you created a good amount of wealth early on. And then from there, did you run this nutrition business, and then what other businesses did you get into in your late 20s and so forth?
Yeah, I hustled really hard in college, and I was making more money than my college professors by my junior and senior year. So, but I was super frugal. My dad taught me, frugality and a little bit too extreme, I would think. I could have had some really great parties with that money, but I banked $50,000. I put it into tech stocks. And that was in the year 2000. And I'm sure you know how that story ended. Within like 4 months, the dot-com bubble crashed and my money dropped in half. And that's when I realized, wow, I might know how to make money, but I sure don't know how to keep it and invest it properly. So that's when I really started focusing and learning how to become a sophisticated investor. And I think to be a sophisticated investor, you have to have a safe base of multiple streams of cash flowing income, of passive income. And then with that solid foundation to build upon, you can speculate more aggressively. You can take that cash flow. It's like playing with house money at the casino. You can then get into pre-IPOs, private placements, altcoins, which are super risky, in cryptos we've seen, some high growth tech stocks. Those are the things that I do now, that I have these safe passive cash flows coming in. So yeah, to get to the next stage of the entrepreneurial journey, it was about 6 years ago, I started buying up real estate just because I got tired of my stocks kind of going up and down. And we had some short sellers attack a couple of my stocks, and it was really frustrating experience, right? So I'm like, I want to get into real estate to have something that I can control. And more wealth has been produced in real estate than any other asset class. So I better learn how to do it. So that's when I got into turnkey about 6 years ago now.
Very good, and that was a great time to get started in the real estate game too. We've seen quite a ride. What's your take on the current market? I mean, you go on YouTube now, and there's all these doom and gloom people, and crash is coming, and I lived the real estate market in 2007, 8, 9, and it was a tough time for a lot of people. But the one thing you realize is that there's always good times and bad times, right? And real estate, if you're buying for the right reasons, the cash flow is always there. You're always going to be protected. Versus when I was younger, I was speculating. But with inflation and everything, you're still pretty bullish in the real estate market right now.
Yeah, I think it's still a great place to park money and to diversify and create safe streams of income. Do I think that there's a possibility that it could correct? Yes. I mean, it's been pretty crazy, right? So it only makes sense that, it'd have to cycle out at some point. I just think the conditions are so much different right now than what they were in 2008 when they crashed. I mean, they were giving away, my business partner who was in real estate at the time, he said that they gave a 6 houses, loans of 6 houses to a stripper on she just stated her income, and she had 6 homes, right?
I used to do those loans. That was me. I was writing those loans.
You were writing those loans?
Oh,
okay,
yeah.
Well, I mean, that's not happening right now, right? I mean, they're really being pretty guarded and careful of who they're loaning to. So we don't have this free-flowing loans going out to people that, don't have the ability to service those notes if anything goes wrong. And then on the other part of why I'm still bullish is if you look at supplies are tight. I mean, it's a simple supply and demand equation. We have a demand for houses and rentals, and there's not very many available. So I don't think that we're going to see this crazy crash. Of course, the Fed keeps raising interest rates to keep inflation under control. Is that going to slow down the housing market? I mean, I don't see how it doesn't, but I don't care that much because I'm not buying properties for the appreciation. Although I want appreciation, it's an important part of the game. I'm buying them based on, do they make sense? Can they cash flow right now? And the appreciation is the icing on the cake. It is an important part of real estate, but it's not necessary for our plan to grow wealth.
That's very good. Can you talk a little bit about the framework of indestructible wealth? Like when did you come up with the idea, and what's really kind of the framework of the vision of indestructible wealth in your eyes?
Yeah, I kind of got bored, I would have to say. I mean, real estate, I like it, but here's the thing about real estate is that there's never been, very few, and rarely does an investor come back and say, thank you so much, you changed my life with this, whatever, right? Putting me into this property or selling me this property. The only time that we hear from investors is when things are going wrong. And what I've loved and still love about my direct sales business is that I'm mentoring and pouring into typically younger entrepreneurs, not always, but being able to help somebody grow in their life and their personal development and help them create life-changing income and a lifestyle. Like, they come back and they write me notes, and they one of them just gave me a book that was signed by the author that killed Osama bin Laden. And he said, he put a personal note in it and said, "Thank you, Rich Dad. You changed my life." Like, I don't get that in the normal scope of real estate or any type of investing that I do, right? So I really need that fulfillment. I need to be pouring into other humans. So Indestructible Wealth was created as a platform to give me that opportunity to pour in and help mentor and help people avoid the mistakes financially that I made.
Do you still own the direct selling nutrition company?
Yeah, that's still a great business. It's cash flowing. It's doing great, and it has incredible leadership that I set up. So it's more on autopilot at this point, and I'm building out the other businesses, but it's something I'll always be a part of and always do. It's truly an incredible community of positive, like-minded individuals that you just don't get to see in too many other business models.
Was that like a multi-level business model?
Yeah, it's a multi-level marketing. Yeah.
They say actually multi-level. Like, when I researched it, that's like another like huge. Like, you're so surprised about the wealth that's created in these type of organizations. Like, like if you stick with it and you do your job. I mean, I see it like in some of the insurance businesses, right? Like, it's a great business model. I think sometimes it gets like a negative, stigma, but I think like it's created tons of millionaires, like these type of businesses, right? Because it teaches you how to sell, and selling is one of the most important skills, if not the most important skill out there.
Yeah, and I think a lot of the downside negativity towards it is just a simple lack of understanding of how they work. And there's some bad apples. There's some bad people, bad companies that kind of tarnish for some of the rest of the really good companies. But the leadership development and the personal development, the growth opportunities those lessons that you learn inside a direct sales company, I mean, priceless. That's where the true wealth is really at. And, it's a very efficient model of distribution to get a product into the marketplace, typically higher quality products. And, you cut out all those markup middlemen, so it's a very, very efficient way to get a product marketed. And so a lot of people just they're not seeing that. They don't want to see it. They have preconceived notions, whatever the case. And I finally realized I don't really care that much what people think about it or don't think about it. I'm going to change, it's changed my life. It's changed a lot of hundreds of people's lives in my organization. So that's all I know.
Yeah. I mean, I look at Ed Millett, right? He's a big insurance guy. They have a similar model, right, in insurance space. And that guy's one of the wealthiest guys under 50 years old, or now he might be a little bit over 50. He's created tremendous wealth. So it's definitely, I mean, I think I think you cut your teeth. Like, I met a couple people early on in life that were selling Cutco, like in their, like, to make a living for college and stuff. And, they are unbelievable salespeople, and they all are very high-level entrepreneurs, and they learned the foundation from Cutco. Same thing with Xerox.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Beau Eckstein, host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again. So, Jack, can you talk what the 7-part process that you use for Indestructible Wealth, kind of like dive into that a little bit?
Yeah, since I came out with the 7, I realized 5 is a little simpler, so I dropped it to 5 stages, and that's more what I teach. It's what I call it's a wealth building strategy. So if you look at how most people invest, it's typically by tactics. So in other words, okay, what stock am I going to buy? Um, I'm deciding between purchasing all these different property options or all these different choices that I consider tactical level, which is that's really important. But beyond that, you need to have a greater overarching strategy to do a wealth building process. And of course, over a multi-decade period, right? But if you follow the stages that I lay out, my opinion, what's happened for me and what's happened for other people that have done the same thing is that you get retired and financially independent a lot sooner than the normal process that traditional finance education teaches. So that's kind of the whole thought philosophy behind it is let's get to financial freedom, instead of taking 40 years, let's do it in 15, 10, 15 years, just cut that amount so that you can enjoy your fruits of your labor and the fruits of your delayed gratification, but you're not delaying it until 65 or 70, right? So the first stage of the 5 is number one investment is yourself. So this is what I did when I was in college. I think that was an incredible investment versus the one that I put 50,000 into risky tech stocks that I didn't understand, right? I purchased a $1,000 coaching package from the Napoleon Hill Foundation. You wrote Think and Grow Rich. And I had a coach for multiple months that kind of worked on my mindset and helped me develop. That's still paying dividends even 25 years later, what I learned going through that course and that process. And that was while I was going to college. So in addition to college, I'm paying extra to invest further into myself, which that's where you're going to get, my opinion, you're going to get the biggest payoff is anything you do to expand your mindset and develop your skills to increase your overall earning power. Stage 2 is invest into and build a cash flow producing business. There's so many advantages that a business owner, entrepreneurs have over employees. Does not make one right and one wrong. There's advantages and disadvantages to both sides of the coin. I'm clear on that. But the advantages of wealth creation and wealth building are, immense with a business owner because you have 2 huge advantages, right? You got tax advantages because you, as a business owner, you get to spend and then pay taxes on what's left. As an employee, you pay taxes first, spend what's left over. So that's just that simple concept saves you a huge amount on taxes, which is the biggest expense by far of any human's earning ability. They're going to pay the most in taxes out of any expense. Far greater than housing, automobile, food, luxuries, all that. You're going to pay way more in taxes. And then the second part is that as you grow your earnings as a business owner, your equity value of your business grows too. So, for example, you get a business to 100,000 in net profits. Well, now you've got, probably 3, 4, 500,000 worth of value right there in that company. That if you do decide, hey, I want to exit, I want to sell, well, you've built up equity just like you would buying a stock. It's the same concept of buying stock in somebody else's company. You're growing the stock and the value of your own. So, once you've built a cash flow producing business, then, you want to live below your means, which is stage 3, and invest the difference into cash flow producing assets like mostly in real estate. Gives you, in my opinion, it gives you the most additional tax advantages and safe, diversified cash flow coming in. But I also do stock options. I think writing options in the stock market is an incredible way to generate safe streams of cash. For example, the service that I follow, it's called Alpha Edge. It's put on by the Palm Beach Group. They have a 98% win rate since 2018 across like 350 trades. 98% win rate 29% annualized returns. That's incredible track record, even in down tough markets like we've recently seen. That still makes money, right? So that creates an additional stream. And then in crypto space, I do crypto mining, staking and lending out your crypto is an additional way to squeeze some cash flow, out of your yield, out of your assets. But mining is the way to really create some incredible cash flow. So we set up I have an Ethereum mine going, and it's not huge, but I also have a Bitcoin mining company as well that has, we have about 155 machines right now, and we have new containers coming in to scale up to about 500 to 600 capacity. So it's not a huge operation, but it's pretty lucrative when it's all plugged in and cranking.
So you really you are really diverse with your investing. You're doing some, you have a kind of a wholesaling business. You occasionally do some flips. You have a self-storage. You're doing short-term rentals now, option trading, Bitcoin mining, and all the different crypto factors. Plus you have your nutrition company. Yeah. Plus. So really you have like 10, 15, 20 streams of income, which is amazing. That's great, right? Because that's kind of what you're preaching, is that you need multiple streams of income that you're making money from. So yeah, I'll
be honest, and just I try to be completely authentic and tell people the real deal, right? We have 21, so you were pretty close there in terms of how many streams of income. It is too many though. It's too many. It's almost like multiple streams of distraction. So what I'm trying to do now is say, okay, what do I love doing the most? What brings me the most fulfillment and joy and all of that? And I'm going to start, saying, now that I have experience in all these different ways of doing it, what do I like the most? I'm going to start really paring it down and then like hyper focus on 4, 5, 6 streams versus 21. It's just ridiculous.
but I think you enjoy the diversification to a certain extent, right? I mean, like, you don't really need to have that many streams of income, and you could probably make more money just focusing, but you're somebody that seems like you're not afraid to try things, and not everything works the way it's planned, and then you can pivot, right? Because that's part of the process, is that some things are going to work better than others, and sometimes I get frustrated because I'm putting effort to something and it's not yielding results.
Moving. Yeah.
But it could be a simple tweak, right? Like I could tweak it, and at some point I got to say, hey, I've tried it 1,000,001 times. It's not working the way I want it to work. Or if I invest in a certain city and it ends up being not what I thought, and the tenants in that city are not, it's like you can just cut that. And that's what I do in real estate investing. I try multiple markets that fit my kind of buy box, and not all of them work out, right? And sometimes you have to evaluate. So for somebody that's listening to the show, you might not need 21 streams of income right now. There's always that famous cliche, like the average millionaire has 7 streams of income, which is true, right? Like,
yes,
you have to have multiple streams of income. I think investing other people's syndications is, if you have a lump of money, you find good operators, right? That's a good, right. Could be good.
That's what I do in the self-storage. I mean, I'm not the operator. I'm not running that show. I'm more of a passive investor. I raise capital in a small, fund, LLC fund, and then we invest into that, into that bigger syndication. And that's incredible. Like, for me to be able to just be completely passive and not have to run anything. And then I don't have to deal with any tenants, toilets, and trash, right? It's an 8x10 locker that they rent for $200 a month. And when they leave, you sweep it out, and within 10 minutes you turn it, right? So I think that it is great to have multiple streams of income. I think it's going to be even more important as we move into this coming age of tech disruption, and you look at all the companies that probably in 10 years won't even be here. I mean, what happened to Blockbuster, where Netflix came in and just completely wiped it off the face of the earth in a few short years, that is going to become even more and more common as we move forward. And so I wanted to make sure with my family that if anything should happen to any of my main big revenue streams where they do get disrupted, or something, a competitor comes in, or market conditions just drastically shift, that our family wouldn't have to be in a stressful situation where we didn't know what to do and we had to, downgrade our lifestyle. I don't want to backtrack, right? I want to maintain the lifestyle that we've enjoyed and grown accustomed to. So, but I think the only way to really protect that is through streams, multiple streams.
No, yeah, that makes a lot of sense. What do you do? What's kind of like your day look like? How do you program? I mean, obviously you from a pretty early stage, you've had a good level of success. So obviously you're doing, what does a daily day look like? Is there any kind of rituals that you're doing that kind of keep you fine-tuned and growing? What does a guy like you do to like just move the needle for yourself to keep on growing and push forward?
Mornings are, everybody says it. I don't want to sound cliche, but I mean, I have a pretty solid morning kind of routine. I mean, first thing, when I get up, I try to not to check my phone, although I'm not always successful at that. I try to really keep that away and just dive into, 30, 45 minutes of reading. And I think all, leaders are readers. So I really want to keep growing and learning, and what are other people doing and how are they thinking and how can they help me? Tall glass of water, stretch, supplementation, and a healthy meal, whether that's a meal replacement shake, could be a healthy protein pancake breakfast, right? I think setting your day in the early first hour and a half is extremely important. And then, it's just diving into, typically it's a conference call each morning with the real estate team, especially since we're pivoting more into short-term rentals. So we're buying up properties like crazy and trying to figure out, how to get rid of some of our other stuff that we no longer want. And then the rest of the day is typically creating content, either working on the podcast, creating short videos for Instagram or Reels, TikTok, and then just trying to figure out, how do I grow this brand? It's not the easiest thing in the world to grow a brand, as I'm sure you've realized. Is there's so much noise out there. There's so many, so much competition for people's attention, and you're competing with Netflix. You're competing with adult websites. Unfortunately, you're competing with, the million other podcasts that are out there. So how do you rise through and rise above that noise to gain attention? That's the game I'm playing right now. Is, attention or influence is the new digital currency. So if you want to have an incredible stream of income coming in through your knowledge, and you have to get plenty of people to listen to your message. What value do you have to add to their lives? And you have to do that first before they're ever going to buy.
Yeah, we are in a world of distractions now where everything's at our fingertips. Everything's easy, but also the ease of everything has made things so much more difficult to focus. The world's changing now. I mean, like, if you have a big following on Instagram and like TikTok, and like people are becoming brands themselves, like from just, there's a lady on TikTok, and she does tutorials on Excel, like how to use Excel and stuff. And she's made millions of dollars now. Like from TikTok, she went from nowhere. Now she has a whole channel. People buy her programs, learning how to learn Excel and all that stuff. And she makes millions of dollars. It's amazing. I was just at a YouTube conference or a video conference, and I met this guy, first guy I met in line for coffee, and we started talking. And he has a YouTube channel, and he fixes things on his YouTube channel, like home repairs. And he does, he films it himself. He doesn't. He's built that up. He's got 350,000 subscribers, and he's making, with AdSense and some affiliate stuff, $30,000 every single month from his YouTube channel. And he's a real estate investor, crushing it there too. And I'm like, oh my God, it's an incredible world we live in, right? It really is. And I just think I think it really comes down to action takers, and then, some of growth, like where you get certain people, and you look at like they've grown huge in whatever they're doing. Some of it's luck and timing. Like you're in the right niche at the right time, and like you invest in the right stock, and it makes you a multi-millionaire. There's certain kind of luck. There's certain, I don't know. I don't know how the secret potion, but all I know is that for the average person, I think if they can just put in the work and constantly grow and learn, then they're going to get better, right? Maybe you're not going to be the biggest dog on the ship or whatever. I know people worth $100 million. I know people that have 40 grand a month coming in and passive income. And like, who do you want to be? Do you want to just be that happy-go-lucky 40 grand a month and my bills are covered and I can travel and do whatever I want? Or do you want to be that person that strives for $100 million? And it's interesting to see people's different personality types. And I think for me personally, I don't need to be the biggest dog on the block, but just that passive income. And I think that resonates with most people that are out there, that to have, whatever your financial independence number is, it costs you 10 grand a month to live with your utilities and fund money. If you could have 15 or 20 grand a month, you have enough, that extra 10 grand a month, you could just reinvest. And you can really do what you want to do. To me, that's what I see that people are really striving for. So you're seeing people trying to start businesses and stuff. So I really applaud you what you're doing with Indestructible Wealth. And I'm definitely going to tune into your podcast and listen more, because I can definitely tell you have a lot of value to bring to everybody.
Yeah, thanks. And just to complete the stages, I know we're on stage 3, right?
Yeah.
Stage 4 is where you take the multiple streams from stage 1, 2, and 3, right? Because stage 1, is your own hustle and earning power. Like that's more like your transactional. I consider transactional sales type money, right? Where you have to keep doing that work over and over again to generate it. And then step 2, right, you got your own passive cash flowing business. And then step 3, you've got passive cash flow from, assets that you own that you're not directly involved with, or so to speak, they're typically managed by somebody else. Or if you're buying stock options, I mean, you're essentially, that's not a lot of time that it takes to run those. I mean, it takes a few minutes a month. So those 3 sources of income, those streams coming in, once those are pretty solid, then what I say is, okay, you really want to move the needle on your net worth. The way you do that is early stage investing. So this is where you're catching, the company while it's still private, or it's in its really early stages, very small cap. It has a chance to disrupt and become a unicorn type company. It's altcoins. I think Bitcoin, Ethereum, pretty safe place to park money for the next 5 to 10 years. Those projects aren't going anywhere. But there's altcoins that they're definitely more of a gamble, but they could be the next Ethereum or Bitcoin, and 10x, 100x, right? And so those are the types of things that you're investing into in stage 4, that if they don't work out, it's no problem. Your lifestyle isn't affected. Your cash flow streams just replenish, and boom, you can do it all over again. Swing for the fences for the next, early stage stock or crypto or whatnot. So, and then stage 5, it's pretty simple. Repeat stages 1 through 4 until you've reached whatever level of wealth you want to reach. But more importantly is charitable giving, give back, be a blessing to other humans. That's really what multiplies your wealth from what I've seen. When we started really putting our charitable giving on autopilot to the places that really are meaningful for us, we really feel like we're making a difference, our net worth has gone up 20x since that time. So we're living better on the 90% than we did on the 100% prior to making that decision to be givers.
That's awesome. Yeah, I think more people need to be givers, and even if it's not a financial gift, it's give your time if you can, right?
I think honestly, I think giving time is harder than giving money. Personally, for me, I mean, that's what I value more than anything is my time. Like I'm guarded, I'm protective, and I don't like it when people waste my time. It's my biggest probably struggle. Is I do not want to waste time. It's so precious, and it's not anything I can replenish. Money I can always replenish. If I make a bad decision, I've made plenty. I can create more value in the marketplace, work harder, right? um, make better decisions, and I can replicate and replace and create more money. But time is something that once it's spent and gone, it can never be recovered. So that's why I think is so important, like what you said, to get to that 10,000 a month in passive income, and then 40. Yes, that's the ultimate goal. 10, you're just basically covering your living expenses in America. That's not any sort of great life.
Yeah.
I think some people think you hit a 10 grand a month, or, you're making six figures, that this is an incredible life, but it's not anymore. I mean, you're probably middle class in a lot of areas of the country. Some you might be upper middle class, but you're not wealthy by any stretch. So 40,000 in passive income, you're going to be able to do all the things that you want to do, right? You're going to be able to pay all your bills easily, and you're going to be able to take all your trips you want to take, and do your charitable giving, and do your investing, and cover your tax burden. And you can do all of that at 40. Again, even at people at 40, Beau, you and I both know, I mean, they can spend 45, 50 a month, and then it's not enough. So
Yeah. It's amazing to me. Like, when I used to do a lot of residential loans, and I would get these people, and this was years ago, this was like 18 years ago, and you get these people making six figures. Six figures back then was good money. And it's like they had nothing in the bank. How can you make this much money and have nothing, no assets, nothing? It's because they always bought these new cars. They never, always refinanced and lived above their means. And like, you have to you have to cut your expenses a little bit. Like, I'm not saying count on every penny, but like, I was just thinking about how much I have on reoccurring like softwares and stuff I use for my business that I'm not even using right now, but I just forget about it, and I'm just getting dinged every month a couple grand. And like, I just need to go cut that, take that $2,000 a month, and just put it somewhere where I forget about it. That's $24,000 a year, compounded. That's like, I could buy one duplex every year just from the waste of the money I'm wasting, right? Like,
Sure.
How much more cash flow, how much more net worth will that equate to? So I think I love the framework you have because it makes sense to me. It completely makes sense. Like, I think that's a framework. Like, we all need to start really focusing on this thing, on this kind of stuff. Okay, like, a lot of us don't even like know what our outgo is, right? Like, hey, just take a pen and paper. What does it cost you to live with insurance, everything, gas, and what are you bringing in? And then, like, if you just have one income right now, you got to get that side hustle, right? And then you keep building from there. And that's what I look at, like, when I own houses. It's like, that's my employee. That duplex is my employee. It goes out. It's pretty passive. I have a property manager. I can rinse and repeat. When it goes up in value, I can harvest the equity and then buy another one and keep growing. And then you start thinking, okay, now you've got a little bit of cash flow going in. Where can I get more cash flow for the same, and that's where you're saying, well, I can go buy a short-term rental property, and this property, as opposed to the C-class property, is going to spit off 4x cash flow. So it just makes more sense, right? Because instead of having 50 C-class units, I could have 5 of these B plus A class short-term rentals, and it gives me the same cash flow, and I don't have to worry about tenants, toilets, and leases and things. So.
Yeah. We had we've done, I don't know, 250 fix and flips and C-class through our company, High Return Real Estate. I started that back in 2016, and it's really getting tougher now with the prices of property that have gone up. The rents have not gone up that much comparative to the prices. So any new acquisitions in the C-class market, there's just, in my opinion, there's not enough yield there to take care of the risk. In terms of risk of tenants defaulting is much higher in C-class. The risk of damage to your property is higher. The risk of, and then on top of that, you have the normal risks of property maintenance, CapEx expenditures. So we were finding like our C-class properties were just getting, there just was no positive cash flow coming out after, we'd make, 6 or 7, 8 grand, and then boom, we'd have to put it right back into a property. So getting tired of that game, we said, okay, where's it at? Short-term rentals, medium-term rentals, where we get leased to a corporate client for a month-to-month or a 6-month type contract at a higher rate. Those are creating some really nice yields to where now I'm really excited about where we're heading with, our own portfolio, and then now how we're helping investors as well.
That's awesome. Well, you're a wealth of information. Where can our viewers follow you? Where's the best place to send them?
Yeah, actually just wrote a book. It's called Building Indestructible Wealth. It just launched yesterday. Finally, gosh, I had it written, I had it done a month ago, but all the sales pages to put it up, I guess it's complicated. I don't know. But anyways, myindestructiblewealth.com is my site. They can get my book there. I have 2 courses, basic and an advanced course. So depending on what level or where you're at on your investing journey, the advanced course is more for 6-figure earners that or those that have 6 figures to invest. And then, my podcast, my blog, everything's right there on my site.
Awesome. Well, thank you so much. And I hope all you viewers out there that are going to watch this in the next week or so when it gets edited are going to get some value out of this. It was really, really great conversation. Yeah. And I highly recommend you definitely follow his channel and tune into the podcast and buy his book and, spend a couple hours reading it, digesting the information, and then take action. And so thanks you so much for your time. Appreciate it.
Yeah. Thanks, Beau, for having me on. Appreciate it.
All right.